This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
Oil prices were little changed on Monday as traders assess the impact of new European sanctions on Russian oil supplies, while they also worry about tariffs possibly weakening fuel demand as Middle East producers are raising output. Brent crude futures climbed 6 cents to $69.34 a barrel by 0344 GMT after settling 0.35% lower on Friday. U.S. West Texas Intermediate crude was at $67.51 a barrel, up 17 cents, following a 0.30% decline in the previous session. The European Union approved on Friday the 18th package of sanctions against Russia over the conflict in Ukraine, which also targeted India's Nayara Energy, an exporter of oil products refined from Russian crude.
Greek tanker operators shipping approved Russian oil exports are expected to continue doing so despite a new wave of tougher sanctions by the European Union that will further tighten restrictions, shipping sources said on Friday. Much of Russia's oil is now exported by a so-called shadow fleet of unregulated tankers, but shipping data shows Greek-owned ships, part of the world's largest tanker fleet, have also been carrying some of the share of Russian crude that does not fall under sanctions or exceed the price cap. The EU on Friday agreed an 18th package of sanctions against Russia over its war in Ukraine, including measures aimed at dealing further blows to its vital energy industry.
Moving on to the top news in the energy sector.
China's Premier Li Qiang announced construction had begun on what will be the world's largest hydropower dam, on the eastern rim of the Tibetan Plateau, at an estimated cost of at least $170 billion, the official Xinhua news agency said. Commencement of the dam, China's most ambitious hydropower project since the Three Gorges Dam on the Yangtze, was seized by Chinese markets as proof of economic stimulus, sending stock prices and bond yields higher on Monday. Made up of 5 cascade hydropower stations with the capacity to produce 300 billion kilowatt-hours of electricity annually, equal to the amount of electricity consumed by Britain last year, the dam will be located in the lower reaches of the Yarlung Zangbo. A section of the river falls 2,000 meters, 6,561 feet, within a span of 50 kilometers, 31 miles, offering huge hydropower potential.
China's fuel oil imports recovered in June after a slump in May, while bunker fuel oil exports also climbed from the previous month, customs data showed on Sunday. Fuel oil imports in June totaled approximately 1.4 million metric tons, or about 295,708 barrels per day. BPD, up 7% from May but were down 6% from the same month a year earlier. Import volumes rebounded after China's Shandong provincial government raised fuel oil import tax rebates for some independent refineries. Demand for refinery feedstock had tapered off earlier in the year after China raised import tariffs and reduced tax rebates on fuel oil shipments. Next, we have the top news in metal markets. China's exports of rare earth magnets to the United States in June soared to more than 7 times their May level, marking a sharp recovery in the flow of critical minerals used in electric vehicles and wind turbines after a Sino-US trade deal. Outbound shipments to the United States from the world's largest producer of rare earth magnets surged to 353 metric tons in June, up 660% from May. Data from the General Administration of Customs showed on Sunday. That came after pacts reached in June to resolve issues around shipments of rare earth minerals and magnets to the United States. Chipmaker NVIDIA plans to resume sales of its H20i chips to China as part of the agreement.
Gold prices climbed on Monday, supported by a weaker dollar as investors monitored developments in U.S. trade talks and awaited potential market-moving catalysts, including the Federal Reserve's policy meeting scheduled for next week. Spot gold was up 0.6% at $3,369.02 per ounce, as of 0654 GMT. U.S. gold futures rose 0.5% to $3,376.40. Dollar has made a subdued start to the week, which has left the door open for gold to post gains early doors with tariff deadlines looming large, KCM Trade Chief Market Analyst Tim Waterer said.
We will now look at the top news in the agricultural sector.
Chicago corn futures fell on Monday after a short covering rally lifted prices by 3.8% last week, with traders balancing concerns that hot weather will shrink U.S. yields against an overall picture of plentiful supply. Wheat futures gave back some of Friday's gains and soybeans were down for the first time in 4 trading sessions as soy oil prices dipped from 2-year highs. The most active corn contract on the Chicago Board of Trade, CBOT, was down 0.4% at $4.26 a bushel by 0245 GMT, with CBOT soybeans falling 0.6% to $10.29 minus 1/4 a bushel and wheat 0.4% lower at $5.44 a bushel.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.